Good afternoon to our CLA family, clients, community partners, and friends. Welcome back to our live stream. Even though we haven't gotten the highly anticipated PPP forgiveness guidance, there is still no shortage of lending legislative updates to bring to you today. So on today's episode, we're going to cover a few different areas. We will start with the PPP, frequently asked questions, safe harbor provisions that we received yesterday. We'll talk about legislative updates on bills moving through DC and the status of forgiveness guidance. And finally, we'll talk about the Economic Injury Disaster Loan Program, or EIDL. Before we dive in today, I do want to cover a few housekeeping items. First of all, as usual, we encourage you to be part of the conversation with us. Feel free to ask questions as we move throughout today's session on the chat. We have several professionals available to engage with you. And following our session, if you've got additional follow-up questions, you can submit them using the link in the dialog box below. Or alternatively, you can visit our COVID-19 resources page at claconnect.com. Now I'd like to introduce our three speakers today. We've got Jack Rybicki joining us, who's going to cover recent PPP updates. Omar Nashashibi with the Franklin Partnership will bring us the latest from DC. And we have Samantha Metcalf from our Manufacturing and Distribution Group, and she's going to be covering an overview and updates related to the Economic Injury Disaster Loans. So welcome to the three of you. So Jack, let's start with you. I think we should start our conversation with the fact that, no surprise, we've had some big breaking news that's on everybody's mind. So May 13th, yesterday, Treasury released some additional guidance about the safe harbor provisions, and we know that there's also been some extensions. So can you talk about what this latest guidance means for all of our borrowers?
Sure, Leslie. Yeah, it was really nice of Treasury to get out an extension one whole day in advance of the looming deadline, but that did get extended now out to May 18th. And the reason they did that was to give everybody a little time to digest the FAQ that they put out a little bit earlier in the day. And the FAQ that came out around 11 p.m. actually was generally good news for borrowers. And it specifically dealt with how Treasury is going to look at and review the whole certification around necessity. That gets back to that whole economic uncertainty thing that came out as part of FAQ 31 and 37 and was obviously on the minds of a lot of the borrowers that were out there and had already driven a number of people to return the money.
Right.
What the new FAQ basically said is that if your loan was below $2 million, and you do have to consider your loan plus any affiliates to get to that $2 million level, but if you were below that $2 million threshold, they're going to basically make the assumption or put a safe harbor in place that says the economic need or the necessity certification that you did was deemed to be made in good faith. So they're not going to reevaluate that one in the event of a review, which is great because there were a lot of folks that were concerned about that.
Yep.
Now, there were also, oh, sorry, Leslie, go ahead.
I said huge relief for those small loans.
Definitely so, definitely so. Now, there was something in here, obviously, for the larger folks as well, right? So for those either individual companies that have loans over 2 million, or if you have an affiliate group over 2 million, there was still a concern because Secretary Mnuchin had come out fairly strongly right around the time they issued FAQ 31 and talked about Treasury going to pursue fraud and criminal charges where possible. And that definitely was in the back of everybody's mind. We did get some clarification, and I would say there was a softening of that as a result of the FAQ that came out. Basically, what they've said now is that you don't necessarily, you can take advantage of the safe harbor now May 18th if you want to, but if you don't take advantage of that safe harbor, when that loan gets reviewed If the SBA comes back and says, we think you were ineligible, you should not have applied to begin with, rather than pursuing litigation and everything, what they're going to do is they're going to ask you to return the loan at that point in time. And if you comply with that request, then the SBA has basically said, we're not going to pursue administrative actions against you or anything, and we're not going to refer you over to any other agencies as well. And so all of that's very important because it does de-escalate the deadline a little bit. Mm-hmm. But I do want to highlight that these things only relate to the one certification on necessity or the economic uncertainty certification. So if there are questions about other certifications, like eligibility or employee count or other things like that, unfortunately, those things are still in play. And Safe Harbor is out there for you still to take advantage of those if you feel like you violated one of those other ones, because there are no safe harbors related to those after May 18th.
Yeah, so I think that's good. And certainly I think it has de-escalated the situation a little bit. I do think that there is still even some uncertainty from just the conversations that I've had with various folks that even if they tell you that you can just repay the loan at that time, well, what does that mean? Does that mean right away? Does that mean over the same 2-year period? So while it's taken down some of that pressure, I think questions still remain. But, I think that's a good situation. So anything else that we should bring the audience up to speed on related to the PPP?
Yeah, so there was one additional interim final rule that got issued yesterday. And again, this was very favorable for borrowers. So as everybody that's been following these live streams knows, guidance has been coming out incrementally, somewhat leaking out over the last month and a half or so now. And some of that guidance would have changed the way people applied for the loans in the first place. Specifically, some of the guidance that came out related to seasonal employees and how you would size the loan in different time periods, and the guidance related to self-employed individuals. So in this case, think about a partnership that has active partners that work in the business. For a while, the banks were interpreting this, and many others in the industry were saying that, well, the company couldn't include those folks because they could file a PPP claim on their own. The Treasury did come out with a rule, about 3 or 4 weeks after the initial application period, and they said that, well, no, all of those people should be included in the application of the company. And so what the IFR did that came out yesterday was basically said, if you didn't have this guidance when you applied for your original loan, you can now go back and apply for an incremental loan to take into consideration those things that you now know are part of the rules. So effectively, you can have 2 loans. It'll all be wrapped into one, but you could take another bite at the apple, so to speak. So, what that means for a company like a partnership that had 10 active owners that didn't include them, and let's just say they all made roughly $100,000 or more last year, that would say they could increase their loan size by roughly $210,000 if they went back to and reapplied for that. So you would work through your bank for those things, but it was a good change and clarified that people that didn't take advantage of the rules as they ultimately got clarified can go back and do that now.
Well, that's great. We really appreciate the updates that you've provided, and we'll keep you around, and towards the end, to the extent we have time, we'll bring you back for some questions. Let's switch now to Omar and talk a little bit about some of the updates that we're hearing from DC. So welcome, Omar.
Thank you.
One of the first things that we want to chat about is this topic of forgiveness guidance. We are all eagerly awaiting this and know that there's been some delay. So what are you able to tell us about what you're hearing?
So yes, everyone's been eagerly awaiting, and I'm starting to sound like a broken record saying it's supposed to be this week, right? Every week we're saying this week. Well, a couple things that are going to hopefully make it this week. We did hear from a Senate Small Business Committee staffer on Tuesday that they did expect the forgiveness guidance to actually really this time come out this week, meaning in the next couple of days. What we were told on Tuesday afternoon is what she told us. So we are, and we also had that reaffirmed by another member as well. So we are considering that it should happen this week. Again, we're already at Thursday afternoon. That doesn't give this week much time left.
Sure.
A couple of things that are driving this here is next week, next Friday, is the 7-week point under the 3P program that began on Friday, April 3rd. That means that under the guidance, the regulations, the banks can begin submitting their paperwork to the SBA to begin that forgiveness process at that 7-week mark. And so we are starting to definitely see that pressure. What we're hearing is some of the delay, frankly, has been because of the pushback from the private sector, from groups such as CLA that have been weighing in and saying we need more clarity. But a lot of it's coming from Capitol Hill. We're talking to staff up there that are not very pleased with the way that things have gone so far with the 3P program. There was an SBA Inspector General report that was issued last Friday that did detail a number of items where they veered away in their guidance from the congressional intent, specifically with regards to the 75% threshold that should go towards payroll costs. We are hearing that potentially there could be a change coming down the line with regards to that and some other areas as well. But keep in mind that this was really written back in March, this is when the legislation was drafted, and the economy then is very, very different than it is today. The interim final rules that we got in early April were also done at a very different time than they are today. So what we're getting from Hill staff is that they're hearing that the SBA and Treasury guidance on forgiveness will allow for much more flexibility. That's the terminology that we're getting from our sources on Capitol Hill, that you'll have a lot more flexibility in the forgiveness rules than the previous guidelines have indicated so far. And so does that mean we're going to have that flexibility on the 75%? We're hearing if Treasury does not move and budge on that, we might see some congressional action in the next piece of legislation to try to do that. I'm also hearing that there's a big push on Capitol Hill to maybe change the forgiveness period from 8 weeks up to 16 weeks. There's legislation that's already been introduced on that. That is in the statute, in the CARES Act itself. So we believe that that would likely take an act of Congress, and it probably could not be done simply through the regulatory process that they've been using so far. So we don't think Congress is done with the 3P program. And a lot of the reason that you are getting the delay on the forgiveness is because you've seen, as Jack just mentioned, a lot more favorable guidance coming more recently, because the people that wrote this thing on Capitol Hill have started to say, wait a minute, this is not exactly what we intended.
That makes sense. Well, fingers crossed that we get that soon. So another thing that I want to touch base with you on is we know that there's other lending programs being considered. One of them we've heard about is the Restart program. What can you tell us about that program?
Sure. There's a number of different things that are floating around town right now. Some that are listed as the Restart program, or others. I think generally most of them are just being loosely described as that, because from now we've been looking at economic stabilization and economic relief programs. At some point, Congress is going to need to start looking at stimulative measures that they can take to jumpstart the economy, particularly when it relates to durable goods. There's a big concern that's out there, even as the restaurants are starting to open. Is there going to be enough liquidity for consumers to go out there and start to make those purchases again? So there is a drive that we've talked to some lobbyists in the automotive supply chain sector. We know they've had conversations with Mnuchin over at Treasury about potentially creating a special purpose vehicle for auto suppliers, similar to what was done over for aviation industry. I think they're still in the early discussions on that, but I think what you're hearing from the auto suppliers is going to resonate and continue throughout industries, because they're saying, we have no orders coming in. We had someone in auto tell us there literally was not a car made in this country for 45 straight days. And so that means now when the orders start to reopen coming here on May 18th, it's going to be a while before suppliers actually get a penny in the door or have made whole during this process. And again, not just automotive suppliers. The concern is you're going to be waiting 45, 60 days before you get payment. But in the meantime, in order to make a part or invest in your business, you have to have access to that raw material. And if you don't have any capital, how can you buy the goods you need to stock your shelves, the materials to make those parts? And so some of the loan programs they're looking at are short-term low-interest loans that would be backed either through the Main Street Lending Fund facility, or something that the Fed's already created that they can tap into that would allow them to basically restart the economy. Because again, the concern is when we ramp up here, it's going to take some time before they get in there. And so the question comes back to the 8-week forgiveness. That's just not enough time for a lot of these companies. They don't have the demand now here at the back end of it. So I think restaurants are going to get some relief. I'm definitely hearing that there's been increased support for maybe a special loan program for them as well. Auto suppliers are putting their push in there. The one thing that I'm not hearing good and favorable news on, the oil industry. It doesn't sound like at least Democrats in Congress are going to allow them to tap into any more than they already have with the facility at Treasury.
Well, that's a really good update on the lending. We've also heard quite a bit of buzz this week about some legislation that's going through the House. So what can you tell us about some of the strategies behind that from both maybe a political agenda standpoint and then also just timing in general of when we might even expect another bill to come through?
Sure. So this legislation has been drafted by Speaker Pelosi and House Democrats. It is 1,800 pages long. The summary is over 90 pages long. There's $3 trillion. To put that in perspective, the federal government outlays for FY 2020 was $4.7 trillion, and we bring in 3.6, and this bill proposes to spend $3 trillion. So it gives you an idea of the scope of where we are. Largely, this is a messaging bill. We don't expect it to become law, and neither does the Speaker's office. What this is intended to do is get the Democrats out, have their position staked. There's a number of things that aren't even, frankly, related to COVID on here that they've inserted. So we don't expect it to become law. We do expect it to likely pass the House of Representatives. They could vote as early as tomorrow, Friday, May 15th at 10 a.m. They're gaveling in at 9, and first votes could start as early as 10. We're hearing that it might pick up 3 to 5 Republicans, might lose 5 to 7 to 10 Democrats, that progressives aren't as happy with some things left out of it. But overall, it'll pass the House, go nowhere in the Senate. What we have already seen this legislation do, though, is force some Republicans in the Senate, particularly those that are in competitive races coming up in November, to say we need to respond. We just can't have liberal Pelosi and Democrats be the ones to only have their marker out. The Republicans in the Senate, they're starting to say, McConnell, no, we do need to actually put some pen to paper on there. Something that we're hearing from both sides of the aisle that's been very popular, once we get past the hurdle from the Democrats' bill and we get down to actual legislating with both sides together, is the employee retention program. That has been a huge hit on Capitol Hill, the employee retention tax credit. Read today, Disney's going to claim $150 million in the quarter alone just on that. And so we are hearing that they're going to likely increase that maybe up to $15,000 from the $10,000 it's currently at. And so the Tax Writing Committee is starting to explore that. One other area of caution is on the net operating loss. We know that Democrats were unhappy that it carried back to the point where you could claim it at the 35% corporate tax rate instead of the 21. So we wouldn't be surprised if they shaved a year off that or got you back and removed the 2018 from the eligibility on that. So we are hearing there's definitely going to be some tax provisions and whatever they get to. The timing we think now looking at sometime in June, certainly by July 4th, but we do expect it to be significant, at least $1 to $2 trillion range or so.
Well, never a dull moment in DC. We appreciate your updates, and we'll also keep you around likewise for any questions that come up at the end. So we'll move now to our third topic and bring Sam Metcalf. And similar to Main Street lending, there hasn't been as much buzz or attention around the economic injury disaster loan program. But that said, it's still a really important program for the right people. So Sam, welcome. And I'd love if you could just start with giving us a refresher on what this program entails.
Hi, Leslie. Absolutely. For obvious reasons, ones that Jack and Omar have talked about, the EIDL has been a second priority to the PPP program. So, with the forgiveness element, it was always a little bit more attractive than the EIDL program, but it does really have a purpose, like you said. It is a great alternative lending source to assist with working capital needs. The main purpose of the loan is to provide funding to pay expenses relating to the operations of the business. So it is different from the PPP program in that way. The PPP program is really focused around assisting with payroll. This is really being used to pay fixed debts, payroll, accounts payable, and other bills that are really struggling to be paid because of the disaster's impact. So, let's get into a little bit. I want to talk about some of the key items that I think you need to be aware of as you're, if you've already applied for the program or if you're looking to apply in the future. So again, I'm going to do a little bit of a comparison, Leslie, to the PPP program because that's what most people are familiar with. But this loan is really directly going through the SBA. So if you've applied, you're already aware of this, but if you want to go after this EIDL program, you have to apply on the SBA webpage. And there's really a two-step process. When you apply, you go out online and you certify why you believe that you are able to apply for this loan, and you give some limited financial information. Once that process works through the system, then there is another process where you then supplement with a whole bunch of financial information to really size the loan. There have been a lot of questions around if you're able to apply for the PPP loan and the EIDL loan. And based on our knowledge at this point in time, yes, you can apply for both, but Leslie, you can't utilize the loan to cover the same expenses. So think of the PPP and the payroll in the 8-week covered period. You can't use the EIDL funds. You can't double up on that when you're giving the information about what you're using the expenses for. The interest rate for the loan is 3.75 for for-profit organizations and 2.75% for nonprofit organizations. There is an ability to get a grant. I'm going to talk about that a little bit later, Leslie, but none of the other loan is forgivable, right? Which is why the PPP was much more attractive. The term of the loan is up to 30 years, and you have the ability to defer that first payment for 1 year, but the interest will accrue during that time. Where the PPP loan, you really understand as much as possible how that loan amount is sized. The EIDL loan, we don't have clarity at this point on how the loan is sized. But the company that is applying for the loan needs to demonstrate a loss resulting from the disaster, needs to demonstrate the need, and then an ability to repay. So when you are applying in that first step of the process, those will be the things that you need to certify to. And then in the second stage of the application process, you need to prove it, right? So while the PPP program doesn't have any guarantees or collateral requirements, the EIDL program does require a UCC lien for $25,000 or over. And there was a guarantee for amounts over $200,000. I'm going to talk about some changes that happened, Leslie. That really isn't applicable anymore.
Okay. Well, that was a really great high-level summary. I loved how you compared and contrasted the two, and it still shows that while it's not maybe as attractive as the PPP to some, still a great vehicle. Now, there have been a lot of changes with the program, and so it would be really helpful if you could talk maybe about what some of those changes were and then where we're at as of today.
Well, Leslie, you know, pretty much everything about this program has changed since the beginning. So what I really want to focus on is the significant changes around the eligibility and the maximum loan amount. So initially, the maximum loan amount was $2 million. Which could really help out some organization with their working capital needs. Now it's been reduced to a maximum of $115,000. Now, beggars can't be choosers. $150,000 is $150,000. Yep. But really, the SBA had to make this decision because of the funds and the limit of availability. So if you look at the PPP program, there was $310 billion made available in the Enhancement Act. For the EIDL program, only $60 billion was made available. So they had to make some decisions on how they were going to allocate those funds. I think you're all pretty well aware that there are grants that you're able to apply for as part of the application process, but that has changed a lot also. So initially, I think all of us knew and heard that if you apply for the EIDL program, you have the ability to take a $10,000 grant, right? So you're able to say, I am interested in that and take that grant. Well, then it changed to up to $10,000, and now it's been clarified to be an advance of $1,000 per employee before the disaster with a maximum of $10,000. So a big change there.
Sure.
Yeah, initially the eligibility for the EIDL loan was similar to the PPP loan, but and actually was even more favorable to some of our nonprofit organizations. But unfortunately, the SBA said that starting May 4th, so May 4th is the line in the sand, the SBA would only accept applications for agricultural organizations. And you would say, why is that? Because initially, the EIDL program didn't even accept agricultural organizations into the program, and now it is focused primarily on those organizations. What the SBA has said is based on the need and other funding available for those organizations, they really needed to move this program to support them.
Yeah, so I think that was a really nice just kind of state of the industry on that. And you alluded to it a little bit that it had to get refunded. So a big question that everybody has about this program is whether or not there's funding available and what it looks like. Can you comment on that?
Well, I think it's a really good question, Leslie, and a really reasonable concern, given all that we've seen with the EIDL changes, the PPP changes, and how quickly the relief funds are being utilized. Honestly, I can't give any certainty that those that have applied will be approved for the loan. What I do know is that, again, the Enhancement Act authorized $60 billion in loans and grants. As of May 7th, the most recent update that I've been able to see, there was a total of $9.8 billion dispersed. So there is still room for applicants to get approved. So again, a lot can happen in 7 days, and the SBA website has an update for you to go and see what has been dispersed. But what they're saying is that, you know, any applications made will be seen on a first come, first serve basis. So I hope that helps. Can't give any certainty, Leslie, but it's what we know.
No, that's great. We've had, you know, various people talking about this on the chat. Somebody mentioned, hey, I got 9,000 3 weeks ago, and now, you know, I still haven't heard anything. And it would be interesting to compare that comment that we got to just any experiences that you have with clients who've maybe gone through the full loan process and what that looked like.
Right. Well, it's interesting because with the PPP program, we saw a lot of activity. Right.
Yep.
We were able to compare, contrast, have conversations, but really with that 9.8 billion being dispersed, that's actually not that much. And so there is an example that I can give you guys that, you know, I just heard about talking to an organization. They applied for the loan and grant on March 29th, right?
Yep.
And at that point in time, the application process was different. You only had to apply one time. So you basically took all of your information and you submitted it at one point in time. Well, 3 weeks later, they received an email notification that they were rewarded the grant, and then they were immediately funded. 3 weeks after that, so just recently, they received a notification from the SBA. They had some back and forth, and that back and forth was email. They did not get on a call with the loan officer, answered questions, and then at the end, they received a DocuSign loan agreement. And then they were funded within the next week. So once the process started moving, it seems to be a pretty efficient process. There were inquiries to that organization around how the money would be spent. And there was specific language in the loan document about eligible expenses. So when you get that loan document, make sure to take a look at it and make sure you really understand. The company was also told that they needed to keep support for expenses, but there wasn't really any guidance around what they were going to have to do with that information or how the submission process was to certify that those expenses were qualified expenses. So again, here's my advice on that. Especially for those organizations that have applied during that two-step process, make sure you're pulling information together. The SBA website has the information that you need to pull together in order to submit and get past that second process. So Leslie, it will help expedite, I think, significantly the process if you have that information ready to go.
Great advice. Well, what I'd like to do with the last couple minutes is bring Jack back. We've been getting just a ton of activity on the chat related to questions on forgiveness, and we may or may not know the answer to them, but I'd love to pose a couple to you specifically, Jack, if that's okay.
Sure.
So one question that has been asked is related to self-employed individuals. As you know, many of them have sized based off their Schedule C income, and there is a cap with their payroll reimbursement for them personally up to just a little north of $15,000. So they're asking, okay, well, if I've got that gap piece there, what are some other strategies they can take advantage of? Can they look at doing maybe a contribution to the solo 401k, or what are some options possibly?
Yeah, unfortunately, this was a hole, I think, in the guidance that's out there. And right now, from what we understand, the only forgiveness that a self-employed individual can get, whether they have employees or not, is only that $15,385. And so there is no real mechanism to get your total loan forgiven. So if that's all you were was a self-employed individual and you got a roughly $21,000 loan, you're going to get stuck with a $5,500 loan that carries forward. And then if you had payroll and the loan was actually higher than that, you get stuck with a larger loan balance, and there's really not a way to recover that through the forgiveness mechanism. Now, we hope that that wasn't the intent that came out in the FAQ, and so that could be fixed through an administrative piece in the forgiveness rules that we hope come out from Treasury soon.
Great. One other super hot area of discussion today on the chat has been related to rent. Can I prepay my rent? Is that okay? What do I do with related party rents? I know we don't have full forgiveness. Any insight you can provide right now as we sit related to rent?
Yeah, sure. So we don't have any new guidance on related party rents. That's one of those that, you know, we might not want to know the answer, so let's not ask the question, right? Because then the worst thing that could happen is they could disallow related party rents. Right now, if we have a lease agreement in place between the related parties, and that was in place as of February 15th, the assumption is that related party rents would be allowed as part of that non-payroll bucket. And we also do have clear guidance, I think, on prepayments. And I think ultimately the intention is that we're going to get 8 weeks worth of payroll in the forgiveness period and 2 months worth of expenses for rent, utilities, and interest on your different loans, right? So prepayments on any of those non-payroll related costs are not going to be permissible, as well as payments of old outstanding balances during the period. Again, we don't think that's going to be permissible. It's really going to be incurred and paid during that time frame, and there'll likely be some conventions on the back end to allow you to pay it after the 8 weeks as long as it gets paid in the normal cycle. But no prepayments is what we're hearing.
Awesome. Well, unfortunately, we are out of time today, but this was a great discussion. I want to thank Sam, Jack, and Omar all for joining us today. Again, if you have follow-up questions after our session today, please feel free to either use the dialog box using the links below or visit our CLA Connect COVID-19 resources page. Until then, please stay safe and healthy and have a wonderful rest of the week. Thank you.
Thanks, Leslie.